They missed their shot. The coordinated assassination attempt on gold and silver failed, despite everything they unleashed on these markets this week. 2, they threw 6 consecutive margin hikes, algorithmic cascades, emergency liquidity, and a media fear blitz calling for $50 silver. 3, they nominated a Federal Reserve chair as a scapegoat, hoping retail would blame policy instead of recognizing a mechanical liquidity flush. 4, institutions were backstopped with emergency Fed lending, while retail traders were wiped out through margin calls and forced liquidation. 5, this was a full-scale assault using every weapon available to break confidence and force weak hands out of the market. 6, and after all of that, look at Friday's close, because price tells the truth when narratives collapse. 7, gold roared back to $49.88, knocking on the $5,000 level after they declared the bull market dead. 8, silver closed green at $76.74, up on the day after 6 margin hikes and non-stop media predictions of collapse. 9, they flushed silver down to $63.90 intraday, one final desperate attempt to break the bulls completely. 10, instead of collapsing, silver reversed violently and closed positive, exposing the exhaustion of sellers in real time. 11, and then Saturday morning, just hours after markets closed, breaking news from China confirmed what we suspected all along. 12, China's central bank bought gold for the 15th consecutive month, purchasing the exact dip they told you to sell. 13, while Western media ran headlines declaring the bull market over, the People's Bank of China was loading gold into vaults. 14, they added 40,000 ounces in January during the most volatile month in modern precious metals history. 15, I am going to show you the charts proving sellers are exhausted and the data revealing who was buying during the panic. 16, I'll also use the timeline to dismantle the Kevin Warsh narrative because the crash started hours before his name appeared. 17, but before we break this down, I need to know who is still standing with us after this coordinated attack. 18, comment your location below and show the algorithm this community is global, informed, and refusing to be shaken out. 19, New York, London, Mumbai, Dubai, Sydney, Tokyo, wherever you are. Let's prove this movement didn't break. 20, now let's start with Friday's market action because this is where the failure becomes impossible to deny. 21, gold staged a powerful recovery on Friday, February 6th, after being smashed lower earlier in the week. 22, gold hit an intraday low near 46.55, a final shakeout designed to trigger stops and force capitulation. 23, instead, gold surged back to close between 49.58 and 49.88 across active contracts. 24, the April 2026 COMEX contract printed 49.8860, knocking directly on the 5,000 psychological level. 25, intraday range was massive, with nearly $100 to $160 recovered in a single session. 26, gold touched 44.03 earlier in the week during Monday's crash when fear peaked everywhere. 27, by Friday's close, gold had recovered over $550 per ounce from the weekly low. 28, despite 6 margin hikes and relentless media pressure, gold remains up over 12% year to date. 29, a market that absorbs a body blow and recovers $500 in a week is not broken. 30, that is a market that survived an engineered liquidation event and stood back up. 31, now let's look at silver because this is where resilience becomes undeniable. 32, COMEX front-month silver settled at 76.735, closing green after everything they threw at it. 33, this came after margins were raised from roughly 12% to 18% in days. 34, media analysts openly called for $50 silver while comparing this cycle to 1980. 35, despite those narratives, silver closed green after 6 consecutive margin hikes. 36, silver hit a brutal intraday low of 63.90, the final flush designed to break conviction. 37, that flush failed and silver reversed violently higher to close positive on the session. 38, for the week, silver was down less than 2% despite historic volatility. 39, year to date, silver remains up over 9% and more than 130% year over year. That is not capitulation, that is suppression failing under pressure. 41, now let's expose who was buying while media told you to sell. 42, Saturday morning, China released official reserves data covering January's crash period. 43, the People's Bank of China confirmed gold purchases for the 15th straight month. 44, they added 40,000 ounces during the same month retail investors were panic selling. 45, China's gold reserves value jumped nearly $50 billion in a single month. 46, this buying streak resumed in late 2024 and has not stopped through volatility. 47, Chinese physical gold demand now accounts for over half of national consumption. 48, The timing matters because January contained the most violent crash in modern metals history. 49. While headlines screamed collapse, China accumulated calmly and methodically. 50. That tells you everything about who understands this market and who doesn't. 51. Media says sell. Central banks say buy. Choose carefully whose actions you trust. 52. Now, let's address the scapegoat narrative involving Kevin Warsh. 53. The crash began hours before his nomination was announced, invalidating the entire media explanation. 54. Selling accelerated around 10:30 Eastern, long before any policy headlines crossed wires. 55. The nomination simply provided a convenient story to mask a mechanical liquidation. 56. What actually caused the crash was margin hikes, forced selling, and algorithmic cascades. Emergency Fed lending protected institutions while retail absorbed the damage. 58. Silver trading volume exploded to levels representing multiple years of global production in one session. 59. That is not human selling. That is automated liquidation. 60. JP Morgan profited through custody, arbitrage, clearing, and physical delivery during the chaos. Meanwhile, COMEX inventories drained and Shanghai inventories hit decade lows. 62. The Shanghai silver price traded far above Western paper prices after the crash. 63. That arbitrage gap proves physical metal cannot flow freely between markets anymore. 64. Silver remained in backwardation even during the supposed crash, signaling extreme physical tightness. A market in backwardation during panic selling is not oversupplied. It is constrained, fractured, and under stress beneath the surface. The paper market says 76. Shanghai says 115. Arbitrage didn't close the gap because the metal isn't available. Vaults are draining while narratives insist the bull market ended. That disconnect is the real story of this week's events. 71. Bloomberg said silver was going to 50, yet it closed green after everything. 72. They said gold was finished, yet it recovered $550 in days. 73. They said nobody was buying, yet China confirmed 15 straight months of accumulation. They blame policy headlines, but the timeline proves mechanical manipulation. This was a coordinated liquidity flush designed to force capitulation. 76, and it failed. 77. Friday's close marked a failed breakdown, not the start of a bear market. 78. Failed breakdowns often precede violent reversals as shorts scramble to cover. If silver reclaims 80, pressure builds rapidly on short positions. 80. If gold reclaims 5,000, the narrative collapses completely. March delivery demand could expose further stress in paper markets. 82. Any delivery failure would accelerate migration to physical and tokenized metals. This battle revealed who controls headlines and who controls metal. 84. The institutions accumulated while retail was flushed out deliberately. 85. The assassination attempt on price failed, and that matters. 86. The vaults are draining, the spread is broken, and sellers are exhausted. This market absorbed everything they threw at it and survived. 88. That is not weakness, that is strength under attack. 89. Next week we watch 5,000 gold and 80 silver closely. They fired their biggest shot, and we are still standing.